Welcome in, you trader nerds. How are you today? It is finally a day that we got some down action. And of course, all it took was me getting out of my call positions for us to get some downward action. So if that's what it took, then my gift to all of you. Market down 0.74%. Finally, we're getting a little bit of movement. So excellent day to put on positions. What's the VIX doing? VIX, though, is not really up at all. Let's look at the VIX. Let's see, Mr. VIX. Hey, y'all turn your game down. Y'all, Daddy's, Jojo, turn your game down. Daddy's in a session, okay? That's bothering me. So it's up 20 cents, but it's still at 14.39. Let's look at the chart on our VIX. Chart on VIX looks like, yeah, I mean, you call that an increase in VIX? Not really. Well, we need one, don't we? But it's up 21 cents on the day. Now, interestingly enough, let's look at our, volume's weak too. Volume's weak. So we don't have a lot of participation in the downward move, do we? Well, we did. And then everybody just took a break and went to lunch. Let's look at our big green monster. You want to? So big green monster says that we are overbought, behave, for the fair market value below. I still think at some point we're going up here to our target of 45.14, but it looks like it wants to fill these gaps first, right? And until we get the point of control moving from here to here, then this is a much more gravitational pull on price right there. Wouldn't surprise us at all to see some movement in there to fill some of those gaps, especially with the point of control where the most volume is traded in the last 10 days here. So anyway, we'll see what happens. Let's look at the linear regression channel, see what it looks like. Linear regression looks like this. So price indeed went above the channel. Now it's back into the channel. Everything looks really, 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 really good. We're above the 20, the 50. Is this the 20 or the 50? Which I can't remember. That's a 50 and 100. So we got a 50 moving average, 100, and a 200 moving average, all above that. All still looks bullish, 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 bullish overall, even though we may go ups and down in between. You should have telegraphed this move. Look at the move upward. You notice the volume increased and then started to decrease, right? So we knew that a pullback was imminent. It is coming. So here we are with our little pullback for the day. So let's see how our account's doing. Our tasty account looks really, really good. Now, during times like this, when it's down, you'll go, oh, my net lick's down. Don't really look at it as far as your net lick from day to day. You're going to suffer those. But look, the account looks totally good. We are in a green zone for way, 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 way down 2 standard deviations. So we're 98% probability of profit on our positions, and all looks well. Yep, got them all checked. All right, so let's see how this one's doing. 37,671, 37,671. So let's put that in and smoke it. 37,671. So we're down a bit. 37,671 on the 20th. Can y'all believe it's the 20th? Isn't this like the first day of summer, or is that tomorrow? One of those equinoxes or solstices or one of those things. So we're down $148 on the day. And our Greeks and ratios, our deltas will have increased. So let's see what our deltas are. 78.41. 78.41. So we're a little too long. 41. And our buying power, VIX is at 14, and our buying power is 95.40. Went down a little bit, 95.40. So our theta looks good. We're a little bit long. So I think what I'm going to do is look to close some of those put credit spreads, which will take away some of my deltas, but we want to preserve that theta. So let's see what we got over here. And it's more difficult over here, y'all, because we just, I don't keep up with my trades as much over here. So let's see, we got 2 3600s and 2 3500s, right? So what if we took one of those off? We know we sold that for about $5. Let's take one of them off, see what that does for us. So we sold it for $5. We could take it off for maybe $1.15. Let's see what that does. Beautiful. So now that took us down 3 deltas, 75.40. I think I could take the other one off. That didn't make much of a difference, did it? So let's take off the 3,600, 3,500, put credit spread, close that one for 115. sold them for 5, so a very nice profit. So that brought our delta 71.38. Boy, it didn't help me much on my deltas, did it? 71.38. Took it down 7 though. 71.38. Good. Yeah. I don't see anything that I really need to do with this account. I think we're good. We're at 25%. We're at 0.10. We're at 71. We're a little bit long, but I'm not putting any calls in. You gotta be crazy. No dang freaking way that I'm gonna do that. Putting calls in. No. I've learned my lesson. All right. Well, I say I learned my lesson. Next thing you know, I'll be putting them in again. And I did y'all stick around the other day when we went through that thing? Like, hey man, it's all bulls if we're above the 10 monthly moving average or the 200 daily moving average. You know, when you're above that, I mean, it's just bulls away most of the time. So why put on calls when we're in a very bullish environment? Yes, it's not the time, not in my opinion. So let's close this one down. We're good with that. Let's see how we're doing in the IRA. Here we go. So probably down a little bit over here, 85,446, 85,446. So let's put him in 85,446. Not bad at all. 620.23. And Greeks and ratios. What are we doing over here? We are. Take our groups off. Now, remember, Joe showed us how to do this. I hope everybody's got it set up where you can just look at your deltas and your thetas without looking at your T-bills. So if anybody needs me to go through that, I will. 133.68, 133.68, 133.68. Now, see, here's the problem. Oh, I guess I was at 14 yesterday. There we go. The problem is we are a little bit too long, but we don't have enough theta. So what I'll do over here is probably buying power is 21,553. 21,553.
Hey, Bobby, I would argue that you do have enough theta since your max theta is only 0.1.
That's a good point. That's a good point, Evan. Very good point.
Normally your max theta is 0.2 and you're shooting for about half of that.
You're right. And I guess we're not used to this low volatility environment. So yeah, I probably do have enough theta, right? And I'm a little bit too long, but you know, the question you got to ask yourself is, am I comfortable with that risk? And I think I am, especially if we go back to the little video we showed the other day that showed, hey man, if you're above that 200 moving average, you know, it's bullish away. No reason to go. And let's look at that on the linear regression thing. Yeah, you're right on that. I should be fine with my. Here's the 200 daily moving average. Look at this, y'all. I mean, since, you know, whatever, we've been above that. Well, it touched it a couple of times. Well, it went down below it here, right? And then you had a close above, and it has been bull away. So yeah, you're going to have a little bit of these instances where you come down. I think you're right, Evan. I am pretty good on that. Because what I was thinking about doing is closing a put debit spread to get my deltas a little bit back in order. And then I was going to do a 1-1-2, but I don't know. Let's just look at it real quick. Like, let's see. Let's show our groups.
Wouldn't closing a put debit spread give you?
I mean, a put credit spread. I'm sorry.
Oh, okay.
Yeah, closing a put credit spread. Let's see how much deltas each one of these are giving us. So put credit spreads, we've got, let's see. And remember that, there we go. Here's my most profitable one that we sold at $5. If you wanted to take a little bit of that off, let's say create a closing order, buy it back for 85 cents. How much deltas and thetas is that one giving me? Let's see. So this position has 2.45 deltas, $1.52 in theta. I don't know. We've taken a lot of profits out of it. So my original plan says, hey, take them off, you know, half their days to expiration or when they get to 40%, but it's still kicking me $1.52 in theta. I don't think there's a reason to take it off. I'll just leave it. So the question is, am I comfortable being over 5 on my think, and I think yes, and I think you're right, Evan. I don't have to add theta because my max is 0.10 in this low volatility environment. We're using our guided amount of buying power, 25%. I think the account looks good. Yeah, account looks good. Let's look at let's see if we can figure out how much money we're going to be making in the next couple of days if we just kind of kick off what we're doing. Portfolio beta weighted, hide simulations, move this to the 20th, P&L day. So through 7/6, if we keep right here, we'll be up $855, $858. Yeah, I think it looks fine. Always looking at your 12% down to see, make sure this isn't going over your net lick, because that's where they hit you with, you got a margin call. So we're at 23,000 down on an $86,000 account. Well, we're fine there. Yeah, I agree. I think there's nothing to do here. Anybody disagree? I always like your input, and I thank Evan for stepping in and say, Bobby, your max is 0.1, and you got 0.08. You're kind of right there. Good. That's why I love y'all being here with me, looking over my shoulder. Helps me so much because I'm an undisciplined trader in so many ways. If I didn't have the accountability of y'all being here, but y'all have learned that already. So in this account, we're at 35,278, 35,278. So we're down a little bit here today, 35,278, 620, 23. And our Gregson ratios look like. I love it now. I don't have to do math. Look at this. So now I'm at 70 and 30, 70, 30, 70, 30. I'm glad that my theta went up. So I'm at 0.09. So I'm right there where I need to be. VIX is at 14. And buying power usage is at 8132. 8132. Beautimous. Beautimous, beautimous. So on this one, I'm 17 long. Let's see what, let's do this. Let's look at our groups here. Let's say our most profitable put credit spread. Put credit spread. Put credit spreads. Let's see, here they are. So here's one. I've got one of these at 59 days. We sold this one 38, 36.80, 35.80. It's given me 4 deltas and a dot. And oh my goodness, they're switching. They're switching between which one's most profitable. Look at that. Well, this one's given me 397 in delta and theta of 181. Okay, why don't we do this? Let's look and see how much a 112, how much delta and theta that we get from them, and just kind of compare, this one compared to putting on U112. Let's just do a comparison, see if we can look at that. So let's go, if I can figure out how to do that. Let's go to the trade tab. Let's go to micros. So does everybody see what I want to do? I'm going to just check. I want to see what one of these trades would do compared to the existing trade that I have on that I could close for a profit. So we go out and we do like bringing in that $20 for a 9% probability of being in the money. So I could probably get it right here, right? I could probably get filled for 1975. That's close. Or I'm going to stay specifically the rules. I could say instead of 72, I got to 87. Go to the 9% probability of profit and get at least $20. So that would be here. Oh my God, look at the bid-ask spread. Surely. Is that right? 14.29. Are y'all seeing this? Now this is more like it because, and you would expect the 4,000 to have more. Look at that bid-ask spread. Yeah, screw that. I'm going back to 72 days. 9% probability of being in the money. Let's go back to that. So that's, let's pretend we were going to sell 2 of these for 20. Sell 2 of those, and we're going to analyze trade. All right, now, let's see. Let's hide positions. So we just show that one trade. All right, 2 of those. Get rid of this. All right, so we got that one. All right, now. Have to build it over here. So now, if we were doing that in the, what was that, the 72 day? 72, we would want at least 36 days on our put debit spread, right? So 36 days on a put debit spread. Let's do a 50 wide. 36 days would be the 41 day. 41 day long put vertical. And here, Jose, we're going through that thing again, how we did this yesterday, right? So there it is. And 34.50 there. We got to move that to where it gets to 42.80, 43.30 is $10. Go down one is $9.75. So looks like in 41 days, the 43.25. Let's go find that. 41 days, 43.25. Come on, little baby. What'd y'all have for lunch? Y'all had lunch yet? I had another 2 pimento cheese sandwiches on, well, 2 of them were on whole wheat bread, and I run out of whole wheat bread, so I use white bread. If you have sunbeam bread where you're at, that's the kind I would recommend. With Blue Plate mayonnaise, y'all, in Splenda tea from Milo's. Oh, so good. All right, 43.25. We said, so we buy the 43.25 and sell the 42.75 for about 10 buckaroonies. So we're going to analyze that trade. All right, so we change that to MES. Okay, so there's our 2. And there's our put debit spread. That looks beautiful. That's the way you say, hey man, you know, nice little trade. All right, so let's see what the Greeks are on that. So the deltas are 0.64. I need to put in SPY here. Hold on a second. I'm gonna get SPY deltas. There we go. So it's 6.48 deltas and 4.47 theta on this puppy. So I guess the conclusion is, hey, Bob, you're not really helping yourself by taking off the 647 by putting this on, because that's going to give you much more deltas than what you would be taking off by your profitable position, right? But it gives me 447 in theta. Let's go back to the monitor tab and look at these things. This one has 17 in delta and 852 in theta. So if I were to close this, let's say I closed, I don't know if they're 15, each one of these has 3 deltas. Just trying to say if I wanted to get my deltas a little, you know, a little shorter. I don't know though. If I closed half of them, what is that, 2 or 3? Get that down to $4, get that down to $8 or $9. Yeah, I don't think I'm going to do it. I think I'm just going to leave it. I think I'm just going to leave that trade. I think there's anything to do on it. Everybody see what I was trying to do? I was trying to say, hey man, you know, if I could get rid of these 3 or 4 thetas, I mean deltas, but then I'd be putting on 6 deltas, so I'd be in a worse shape. That's good. That's good to know. Now look at this one. This one's got 9 deltas and 4 thetas. That's similar to the trade that I'd be putting on, right? Well, not really. It's got more deltas than the trade I'd be putting on, but it's got less theta. And this one, I could close them for what? Very closing order for $1.50. Yeah, what's the point? I think I'm going to leave it like it is. I think we'll leave it like it is. All right, so we will leave the account as 70 deltas, 30 thetas, because we're right there, and we are really good on buying power. And the thought process was, hey, I'll take off a profitable put credit spread and maybe replace it with a 112. But as we saw, I would be worse off delta wise, and I would be a little better on theta wise, right? Because we'd be increasing our theta. So I think it's just leave it where it's at. And I'm not very much too positive, right? Especially when you go back to the consideration, hey, we're in a bull market. We're in a bull market. We're going to have pullbacks. The pullbacks are going to make my deltas more negative. So just keep the course. Just keep the course. All right, guys, any questions, any comments, any concerns? How are y'all doing? Did everybody get out of their calls? You're still in your calls. If you're in your calls, you're sitting there good today, right? Because the thing is going back down. I hate them. God, I hate calls. I never have been successful with them. Every time I put one on, the market just races up. And that's why I was kind of like, let me come up with a little bit of a timing pattern, right? That would allow me to stay out of the market or stay out of calls if certain conditions were met. And let's just build that real quick while we're just fooling around. So here we are, and we've got a number of, I think we've got a 10 and 20. Let's see what we've got. Studies here. We've got studies, edit studies. So it says we've got a 20 moving average, a 50 moving average, and a 200 moving average. Okay, so let's build something different. Let's get rid of volume profile. Let's get rid of Bollinger Bands. I didn't know we had Bollinger Bands on there. And let's do a simple moving average. Well, let's keep that. Let's do this first of all. Let's do it on the 200. Right? So 200 moving average is roughly the same thing as the 10-month moving average. Everybody with me? So let's apply that to our chart. Now, let's change the chart to a daily. There we go. Change the chart to a daily. Yep. And now you see, let's make sure we got it right. Daily. Yeah, so each bar is a day. Make sure that's right. Yep, each bar is a day. So we've got a 200 moving average. So the thought process is, if we are closing above the 200 daily moving average, then we are in a what? We're in a bull market. During this bull market that we're in, you see, it would have been really kind of futile to sell on the call side. I mean, that's where we got hit in this area, right? So maybe not put as many calls on when we're above that 200 moving average, based on the little back test that we showed the other day. Okay, so let's save this. Let's save this. And we'll save the grid as, and we'll call this daily 200 moving average. Okay. Does anybody want that? I'll show it with you. Okay, so Fred rolled his calls out and up last week. Oh, excellent. Oh, and thanks for reminding me about the T-bills, Hal. We'll do those too. Yeah. All right, so we got that. Does anybody want this chart before let me just share it with you. Share grid. Share. Okay, so we got that. So let me send it into our thing. You can copy this and paste it. All right, so let's go back to the charts. And let's build another one. All right, so there's our 200 moving average. Now, let's do this on the monthly as well. So we can look at that 10-month moving average. So let's go time frame. We'll do time interval, I don't know, 10 years. Aggregation period, we'll make that a month. Let's see what that looks like. Oh yeah, that's beautiful. Right, just shows us a monthly. And then what that back test showed us the other day was that we would go to the studies and we would edit the studies and we would change this to a 10-month moving average. Okay, so the late 10-month moving average. Let me move that up and save it. Okay. And apply. Okay. Okay, so here we go. So this is the 10-month moving average. So if you get a bar close above the 10-month moving average, you are what? You are in a bull market. Well, that apparently was the case from the June of 2020 on, right? And you would have said to yourself and said, hey, man, as long as this thing is closing above that 200 moving average, no way in crap that I am selling calls or call spreads. Okay, so then you get a bar close below the 10 monthly moving average, and you say, you know what, maybe that's an environment where selling calls would work. And indeed, it looks like that would have been the case. All right, you get a close above. You say, man, I'm out of calls. Well, then it would have worked if you'd done calls. You got to close the hole. And then you go, well, we're in a bearish market. Now calls will work. Then the next month, so there are times that you're going to get some, interplay among the 10-month moving average, to where it's probably good to do calls and puts when you're really close to it. So then you get a close, and this one, even though it's a red, well, this one closed above. This one did not close below. So beginning in January of 23, y'all, we would have basically said, screw the calls. There's no way I'm putting something on the calls because what? We are in that bull market. It's really good to look at this on the 10-month, right? Because that kind of, in a lot of ways, look at this. You would have gone bullish here and said, man, puts are my friend. I'm selling my puts. Look at there. You never close below until here. Here's where you might say maybe puts and calls would both work, right? Close below. You don't close above, then you close above and you say, oh man, I don't know about those calls. And sure enough, look what happens. Well, you get a close below here, interplay between the 10-month moving average there. So use whatever you want to. Use whatever you want to. So I'm going to save this one as well that we might look at from time to time. So let's save this one as monthly.
I just want to say, I feel like that it looks easy in hindsight, but if you go and look at the beginning of 2020, where we had that 30% drop, I mean, on this chart, that looks like nothing.
Right.
But
It looks
the
like
reality
absolutely
is,
nothing.
like, all of your put positions are getting annihilated there.
Right. Absolutely.
If not your entire account based on back tests that we've seen. So I think it's, when we're zoomed out like this with hindsight in mind, it looks easy. Oh, just go long above and short below type thing. But at the same time, I mean, that's a 30% drop. So most accounts got blown out there anyways.
Right, got blown out here. Absolutely. At the same time, though, and two, I don't think that there's a place on here where I go, I'm not selling puts, right? I don't think I'm using it that. I think I was using this more, Evan, and I'd be interested to know what your thoughts on it. It's just kind of when to maybe lighten up on the call side rather than, saying, oh man, I'm in the calls, when it's clear that we're kind of in an uptrend. I don't know. This was just kind of a thing that I thought more about calls than puts. I don't think that at this point I would go, okay, we got to close below the 10-month moving average. I'm staying out of puts. I don't think I would have done that. I don't think I'm using it for that. Now,
right.
In hindsight's 50-50, according to Pat Dye, former deceased coach of the Auburn Tigers. But God, if you did use it there, I mean, you would have been grateful, So I don't know.
I shouldn't have used that language. I was trying to kind of get to my point quickly there. I wasn't saying that you would go out of puts and only buy calls. I was more so saying that it's easy to kind of look at that and say, okay, we're not in a bullish environment anymore.
Right.
But the problem is, by that point in time, you don't have any calls on yet to kind of cushion some of that pullback.
Right. Evan, tell us, because you've been doing really good with your calls, tell us how you manage yours. I remember last week you told us that you had taken one off and lightened it a little bit, but what did you hold on to them, or what did you do? How is things looking with in the calls?
Well, so for me, I mean, a couple criteria. I'm looking at staying delta neutral. And then I also have my 30 delta stop out point. None of mine hit 30 delta. I got to a point on all of them where my overall portfolio delta was off balance enough that I was closing them to kind of even things out.
Yeah.
But yeah, that's kind of been my management with them. I didn't cap the risk by making credit spreads. So I kind of knew, I have to keep an eye on my overall delta and I have to keep an eye on the individual delta. But the portfolio metrics were off balance well before I hit 30 delta on any individual trade. So I just kind of rebalanced that way.
And isn't that the best way to do? I mean, we say, hey, man, don't manage them until, they hit a 30 delta. But by that time, you're right. Your other portfolio metrics will have changed to a point that you would say, well, I probably need to close it so that my deltas are in line or the theta's in line, right? Or your buying power.
If you want to go into, we'll call it your quote unquote worst portfolio, the one that was up, or it was like long 17 deltas or whatever. I'm sure if you looked at your biggest losing position or the one that was the one that was hurting you the most, I'd be willing to bet it's probably not even at a 20 delta yet. And your portfolio is already telling you, hey, take some risk off or rebalance. So I would imagine that you'll never hit 30 delta if you kind of listen to the overall metrics, which is good. I mean, we don't want to be there. So
yeah, I think it gives us warnings beforehand, doesn't it? The portfolio metrics really do. And this really is, y'all, where we make those decisions to manage the account. I mean, thinking about that, you're sitting there, my max theta is 0.10. Maybe I should take off one of those put credit spreads. I don't know. The question's got to be, am I comfortable with that risk of being long 17 SPY? And I think I am. Now, Dan says, I've seen other YouTube content creators do the same thing, but with a 50-day moving average. Yeah, and so on this, I mean, I use the 50 as well. So on this one, this is the 50, this is the 100, and this is the 200. So I absolutely look at them, right? Where you got the golden cross and the death cross, where the 50, goes above the 200. And I think I don't want us ever to be like, oh my God, we are beholden to technical analysis. I don't want us to ever be that. And I'm not writing it in my plan even. I have not written in the big green monster in my trading plan. It is something that I look at. It's not something that dictates my decisions. The moving average that we saw the other day with the 10-month or the 200 daily moving average, it works great in back tests. It doesn't mean it's always going to be a good thing for us to look at. Now, I'll show you the third one that I've not shown you, that I think I'm going to just put on here is just for something to look at. So we've got a monthly one that we look at. We've got a daily that we look at. Let's look at a weekly. Okay. So let's change this to 3 years in week. All right, so this is a weekly chart. Now let's go in and let's change the studies on this one. So edit studies, we're going to take off let's see, can I change that to a simple moving average, or can I make it, no. So now we're going to move this, and we're going to use a exponential moving average. Let's see if I can find it quickly. Moving average, exponential, hold on a second. Moving EMA, adaptive EMA. Let's see, exponential, moving average exponential. Yeah, let's do this. And let's do, and people use different ones all the time, right? So we're going to do a 10. And then we're going to add one more of these. So we're going to go moving average exponential, and we're going to do a 20 exponential. And I've not shared with you guys the information on this one, but we will show that to you because I know you're interested and like all these things, seeing if you're in a bull or a bear. So, okay, so we got to change colors of them. So that looks better. Let's see, studies, edit studies. Let's make this one. So that one's blue. I guess we'll make this one. Let's make it something funky. How about orange? Oh, that's Auburn color. I can't do that. Let's do green. Something nice and dark. All right, now let's look at it. Okay, so in this case, you're looking at a weekly chart with a 10 and 20, kind of figuring out if the mood is bullish or bearish. And what you would like to do is to stay out of some of these corrective times, right? So let's see, this is 2021, 22, and here we are into 23. Okay, so if the 10 is closing above the 20, you consider that to be, we're kind of in a bullish trend, right? So maybe that's another thing that you could, I'm gonna save this one as well. If y'all want these, let me know since I've got them built. Let's see, save grid as, we'll do this as weekly. Weekly. 10 versus 20 exponential moving average. And by exponential, it just takes the most recent ones and gives more weight to them, right? So you see that the 10 is getting a little bit of distance from the 20, which means we're kind of in this roaring bull market. Is another thing that I would say, and not to say I'm not going to sell call or not going to sell puts when we're below. I think I'll always sell puts because the probabilities are the probabilities. So this is not going to protect me really here. But where I'm hoping that it protects me on is sometimes of these selling calls. If we're above that, it's just a third indication that we are in a bullish market, may not be the best time to load up on the calls. And that's all I'm using it for. Brett says, looking at one single thing and making a decision based on it is always a problem. Absolutely. You can't look at just one thing, right? You look at several, just to kind of get a feel for things. And I think what we've got a feel for is that we're in a, we're in a bull market now. We're in a bull market. And it wouldn't surprise me at all if we're going to see, that we're going to go above the highs that we had back here. I think that's where we're headed. And that's why I love the linear regression channel. Linear regression channel just makes things really, really clear, right? You look at this and you go, oh man, hey, we're vacillating up and down, but overall, we are going up. I mean, you can see the 200 moving average is moving up, the 100 moving average is moving up, and the 50 is really moving up. It's getting more distance between this, and that's all it is. We're just trying to say, is the trend kind of bullish or kind of bearish or kind of neutral? And right now we're bullish. And that, looking at all the factors that we've gone through today, helps me to realize, hey, Bobby, keep selling your puts, little friend. Hey, don't do a lot of calls right now. It's just not the time for calls. Yeah, they're helping me today. And let's see the account that I don't show y'all much. Let me show this one. This is the one that the Muscadine Mafia gets to see every week. So let's go to this account. We still got calls in here. So let's see how we're doing today. And this one, let's see, still got calls in this one. Hey, we're up $60, $73 today. We're up $730 on the open stuff. Yay. So it's not that I got rid of all my calls. We still got calls. Let's see, we got calls and puts. My calls are doing good today. My puts are not. So a lot of different ways to skin this cat. All right, guys, don't go anywhere because we're going to buy some T-bills. But for all of our YouTube people, we're going to say goodbye, y'all. Like and subscribe, and I'll see y'all tomorrow.